Sullivan. I'm a former IRS agent and teaching instructor with the IRS. Welcome to my YouTube station. It's the home of the 5-minute or less video. I have everything I can tell you right up here in my head. I don't need a fancy suit or coat or don't need to read scripts. I just shoot and fire. After 50 years, I should know what I'm doing. Many of you have reached out to me. You've seen me on television. I have a number of interviews I do on national news broadcasts. They ask my opinion as a former IRS agent. You can see my videos and my team at 777irs.com. When you do that, you'll see all our bios and all the experience, and you'll find us in the description section below. I want to tell you today why you get audited, and people are going to say, gee, what's the number one reason and why do I get audited? Well, it may surprise you, but your diff score and a computer algorithm actually goes ahead and you get pulled for an audit because of your diff score. You're going to say, what the hell is a diff score? Well, it's a discriminatory index function score number that kicks your tax return out. So people are going to say, well, how can I avoid that? How can I avoid an audit? Why is the computer picking my return, and how does the process work? So today to you about the actual process of having your return audited. Every single tax return goes in to the IRS computer system, their K2 system, and they all get a diff score number. When I worked at IRS, every diff score was on the back of the return. You could find out, let's just say diff scores range anywhere from 20 to 100. So IRS's algorithm would go ahead, scan that return, and boom, like a report card or an SAT score, it would go ahead and assign a diff score to that. That means what's the likelihood that tax return or your tax return would in fact get audited. How does that work? So what IRS does is IRS compares your tax return with everyone else's tax return in that income tax bracket. So IRS will know what your neighbor and everyone else's return, what they spent on different deductions and interest, business deductions, and they go ahead and they come up with national averages. It's very fair. They may have a 20-point average ratio. So if you start going in the 21, 22, 23, it starts raising flags with Internal Revenue Service. IRS may say, well, how many flags do we need to go ahead and say, this return is audited? We don't know. It's a secret formula that IRS uses. But when IRS sees a number of flags and your diff score goes higher and higher, IRS says, we want to pull this tax return for a potential audit. Remember, I said the word potential. Why potential? Well, IRS can only audit so many tax returns a year. They try to spread that out over different into different occupations, into different dollar amounts all across the country. So they want to be fair. So they then go ahead and send a batch, say, of 500 down to a particular office. The revenue agents at that office who are experienced will go through every one of those tax returns and then send them back to the service center and say, these seem like they should be audited, because not only are they falling out of the range of the normal diff scores, but we see things, sorry about the stream, we see things on the tax return that really seem abnormal. So not only is the computer sending that out, an IRS agent is going to confirm that. So what happens next? IRS then knows how long it takes for every audit. So then they gather this kind of intelligence and then decide how many returns that they want every office to complete in a given year, what the fields are, and making sure it's fair across the board. So if your return gets selected for audit, it's generally because of the diff score, the algorithms that they ran, and a revenue agent looking at your return saying, we think this is low-hanging fruit. Just because it's low-hanging fruit does not mean you're going to have a audit that's going to go in the favor of IRS. Well, anyway, that is the IRS audit process on how they pull, but there is a tip. The most important thing that I'm going to tell you is coming right now. If you're high in an area like charitable deductions, you had theft or casualty loss, attach copies of those expenses to the return. So when the auditor at the local office is looking at those, you have the actual receipts, so the deduction is supported. Don't tell anyone I said that, but that's how you can avoid an IRS tax audit. This was good. Leave me a subscription if you would. I love those because YouTube loves them. So what YouTube loves, I guess I have to love. So no, it helps me in the ratings. I'd appreciate. Leave me a comment. I'm happy to go ahead. If you have a YouTube idea, I'll make something up for you.